Well, I knew it was going to happen. In fact, I've been saying this for quite some time that the market was overdue for a correction. And my whole intent on making this video is to reach out to you if you've got concerns. If you don't, you can just skip the whole thing. But I know some of you will have some concerns about what is going on. So I got a short little presentation here to try and remove your fears, eliminate panic, and keep you focused long term. You know, what is going on? Well, it's not one thing. And my new kind of favorite buzzword is multifactorial, or it's a composite of many things that are going on. And let me just go over those, the things that are putting pressure on the market. Number one is the Fed, and ultimately it's a negative story, but I think it leads to a good story, a positive. The negative is the Fed has been raising interest rates and has left interest rates up for a long time. So that has put pressures on the market and the economy. And I think it's kind of reached a high point. The Fed has announced, and this is the good news, and the Fed is a very precarious job, and I don't want to get into it today. I'm not a fan of the Fed regulation of the U.S. money system. But I really feel in this last little period of time, they've done a really good job of not oversteering the bike. I was worried about it last year and early this year that they would crash the markets, crash the economy. They didn't. And when I say crash, I mean really a hard landing, not this recession buzzword that you hear being thrown around, which I am going to get to in a second. So I think they're doing a pretty good job of not oversteering this thing. Is there a chance that there might be an emergency rate drop? There is. To me, it's insignificant. They've said that they're going to drop rates. I think it's imminent. Whether it's September or October, the rate decrease is imminent. And of course, that is positive for stocks. We have geopolitical threats. I think there's two major ones. One is Israel-Iran. Iran has been emboldened by the lack of pressure from the world, and it looks like there's a good chance for that to be a war. I don't think it will expand. Other countries, in my opinion, from my military point of view, don't want to get into that mess, and I believe that the Israeli military force will make quick work of Iran. Thank God Iran hasn't nuclearized in form of military response. That is one of my big fears, which brings me to geopolitical point number two, the election. So, wow, things have changed. In just a few short weeks, we've gone from Donald Trump leading Joe Biden by about 6 points. Biden jumps out, Harris comes in, almost right away equalizes the spread. And as I predicted in a previous video, the Democrats are using this period of time for their own media exposure. They've taken the spotlight, and soon to be announced, maybe by the time you see this video, it'll be announced. But the Democrats are doing a very good job of countering Trump's actions. And I've got some issues with how Trump is playing this hand. I'll probably do another video on that. But I will say the Democrats are playing their hand very good. They had a chance to bring Harris to the forefront and see how that played out. And they could have retracted that, but it played out very well. So now they're playing that hand. They're also looking at a VP nominee that's going to be hard on the border. The Democrats are playing this extremely smart and are a formidable foe if you're a Republican. And again, I'm trying to stay fairly neutral on these videos and not bring out my political bias, but look at it from a markets and economy standpoint. Going back to the geopolitical risk, most people would believe that Trump is pro-business more so than Harris, that Trump is lower taxes more so than Harris, and that's a big scare because Harris has been rumored to want to go after capital gains rates and increase them. So obviously that has a very instant correlation on investment. Whether she would do that, I don't know, but I think that markets are always built on what they think could happen, and as people play this out, they could be worried about that. Furthermore, price to earnings have gotten really high. We've seen a long run up of this market. Folks, it's been good for a long, long time. Okay? It's really, in my mind, has been overdue for a correction. We're getting our correction. Like you, I hope it's not a big one. I hope it's not a long one. I don't think it is. It could be. You can never take that off the table. But from my outlook on the economy, I think we'll have, a fairly short-lived correction. And it's really overdue, and especially tech. Tech has run up so much in the last year. So I really think this is good, and I'm not trying to spin it, but I've literally been saying since the start of the year that these markets are running up a little bit too quick. I also think that Warren Buffett making a large sale of Apple on Friday also instigated markets and caused some of the market moves early, like the Japan market move, the pre-American markets kind of fell apart as the sun was coming around the globe. I think that also had an added negative issue to the market. I don't want to get overly simplistic, but for all of you that are my current clients, you've heard me say there's three things that can happen, and you need to be ready for all three. The market could go up, the market could go sideways, and the market could go down. You need to be mentally ready for those at all times because something could always happen. I really think that this, could have been fairly predicted as I've been calling for a correction, but you need to prepare yourself and not get too hooked into the candy, if you will, of, over a year with, pretty minor corrections. We might have a sell-off and it might last a little while. I'm not really worried about it. All right, one thing I noticed, the news bombers, they try to inject fear, and I want to say I don't listen to the news very much. I will have business news on during the day with the volume off, but when I turn the volume on, and especially today as I was getting ready to address you, they're dropping this recession term like it's a bomb. It really bothers me. Recessions are a regular part of the business cycle, right? I think the Fed has bicycle steered us pretty well. If we dip into a recession, and I hate to sound flippant, I don't care. I think they really have things under control, and they'll steer us out of it. The business owners and the executives that I work with tend to think the economy's pretty well, and the reports I get on sales and business health have been good. When that starts dropping off, then I start worrying. Certainly, as we would know, and as is predictable, the raising of the rates, the increasing interest rates have put pressure on the economy predictably to slow it down, and it's slowed down. The good news is that it had the intended effect. Could they go a little too far with it? Maybe they did. It can be brought back. So please don't have a panic attack when they start bombing the word recession out. If you look in this graph, over the history of the S&P 500, you can see all those recessions and all those depressions. Folks, my main point today is going to be, throughout history, the bias, overall, dominant bias of the market is to move up. So if we go in a recession, and I don't think we're headed for a depression, but I'll use the word, the markets will recover. The markets will recover. This is my hope. If you're invested in the market, it's probably your long-term belief, as it is mine. We share that. And so we've got to be able to take these bumps in the road. What have we been doing? Well, I know in some of our portfolios, they have already raised some cash. I know on the watch list, they've already been looking at stocks to buy at certain points. So in our actively managed accounts, we have been already doing that. I don't know what our investment committee's conversations have done over the last 2 weeks, but if you look at what we've done historically, we've taken these as opportunities to rebalance and actually use a downturn in the market as an opportunity. We remain long-term investors, not market timers, and that credo will not change. What should you do? Well, you should remain diversified. You should not panic. I've gotten one email, maybe a few more because I haven't looked at my emails and I haven't been available for calls. I'll probably get a few more. Please don't panic. Don't sell into a market that's headed south, right? If you can avoid it, please don't sell your aggressive accounts for income. I think that would be a very bad move right now. Hopefully you've got diversification and you've got some conservative accounts that won't be hammered really bad should this turn uglier, to kind of give you some buoyancy through this situation. If you've got things maturing like CDs or bonds, this might be an opportunity to buy. So let's look at the positive side of this if you have the availability to take advantage of it. Also, it might be the last ripe spot in a long secular bull market to do a Roth conversion. So contact your advisor about that, but this might be a good chance to do a Roth conversion at lower evaluations, which of course benefit you because you convert now, pay the tax at a lower amount and put it in a Roth, and obviously as it grows, that money is tax-free. Don't be a news addict, please. I don't just say that for your business and stock market decisions. Over the last 20 years, when I have listened to a medium amount to a lot of news, it really ruins my psyche. And I would encourage you, the news is very bad. I noticed on the business news today as markets are headed south, all the commercials, they're using this negative news to make money, right? So keep a straight mind, keep a long-term point of view. If you're a long-term investor, stay dedicated to your strategic plan. This is how you win. Remember, the market bias over the last 100 years has always been up. If all this fails, please give me a call. My rule is one night of sleep. If you lose one night of sleep, get on the phone, send me your email. I always honor the chance to talk to you.